Hi everybody, Brian here from quantlabs.net. Just wanted to show you four or five stories. So today is October 30th, Tuesday. First one is central banks are piling into gold. So obviously not a good sign if they may be running out of bullets outside of raising interest rates like they're doing in the US. We're getting affected as well in Canada. So they decide to pile into gold, but our wonderful leader decides to sell off gold. But anyways, that doesn't matter. So this article found on seekingalpha.com, article entitled, it's from October 7th, but it's still valid today. Central banks are piling into gold. As you know, I like my charts. Here's a chart of, in blue, COMEX, gold combined managed money, long positions, orange for short positions. So looks like there is more sentiment towards the short side, but according to this, just trying to see what the red means. Yeah, looks like there's no TNX, TVC, TYX, TVC. I'm not sure what this would mean. I'm not going to get into that. Probably means something I should. Anyways, next article. Let me just move on to this here. Let me count the ways stock markets are tanking. October 24th, Bloomberg.com. It's a Bloomberg opinion again. It's let me count the ways stock markets are tanking. So here's one. Rising dollar is adding pressure on U.S. stock prices as exports become less competitive. So as we all know, the dollar rises, fewer countries will import American product because it becomes more expensive. And the trade war does not help with China, obviously, as well. Here's another one. MSCI, All Country World Index is dropping off. G4, central bank assets as a percent of GDP. So it has risen since 2012, which means that central banks are inflating as a economic activity as part of GDP. I think this is a wrong measurement. General stock markets are suffering at the same time central banks withdraw stimulus. So this is now the point that they've talked about where they put the punch bowl out in front of everybody, and now they're taking it back because the basically they have to, because the markets have popped like they've wanted, and now we're starting to see the dependence on that kind of come off. Another chart here. Canada's dollar jumps as a national or the nation's central bank raises rates and says more to come. So if the Canadian dollar or loonie drops off, that might be good for the economy, as in this case the dollar drops and there's more export opportunity. But well, we've kind of sold off a lot of our product to foreign companies. Next one, the cost to protect junk bonds from the default with credit swaps is at the highest. Well, traditionally, junk bonds were at the highest, so now they want, because it's more risky in this environment, they want more a premium. They demand more premium because it's more risky, so up it goes. Let's see on gold. Price of palladium is poised to rise above gold for the first time since 2002. In my charts, I can't remember if it was palladium or the other one. Platinum was going down in value, but this is an interesting one. It's just gold has been flat for so long, since 2012, December 2012. So good set of charts here. Let's see what else. Here's another interesting article, and this is very true. Found on CNBC.com. Trump celebrated the stock market surge in 2017, but he's quiet about this year's decline. Very true. Here he says this was dated January 3rd, 2018. a tweet from Trump. Stock market had another good day, but now the tax cut bill has passed. We have tremendous upward potential, which lasted about 9-10 months. Dow just short of 25,000, number that few thought would be possible this soon into my administration. Also, unemployment went down to 4.1%, getting better. Things are starting to tail off here. As you can see, the markets have come up from, according to this S&P 500, roughly 20 to 50, all the way up to 2673. That was in December of last year. So that's pretty well it for that article. So here, again, at the end of 2017, he said on Twitter, this is Trump, all signs are that business is looking really good for next year, only to be helped further by tax cut bill. Will be another great year for companies and jobs. Stock market is poised for another another year of success. Yeah, well, that was 9 months ago. So here we are. He's talking about, October 16th, not too long ago. The stock market's up by 48 points today. Also great job numbers. So not as enthusiastic. I'm sure he's doing that as we lead into the midterms in the next week or two. China. Is this something to be concerned about? China currency hit its lowest level in a decade. What next? That might be a big win for Trump. In the Trump wars, it would be killing off the Chinese economy, potentially, and as a result, force China to the negotiating table on the trade wars. So that may come to pass. Here's something I've been tracking on my metrics since I've added on the Awanda CFDs market stuff. I posted a webinar last night about it. Treasury yields fall after Fed's inflation gauge misses forecasts. U.S. economy grew at 3.5%, which is pretty good. But the U.S. Treasury, I think it's a 5-year, 10-year, here we go, has fallen, but still has broken through at 3.079%. The 30-year Treasury dipped to 3.35. That's good. But this article was written October 26th on Friday. So, in my mind, consumer spending, which accounted 2/3 of the economy, surged by 4% in the third quarter. Fastest pace since fourth quarter 2014. Numbers are looking good, but I do think that the party is going to come to an end. That's why we're having a down market. Main thing where we might need to move along a bit quicker. If inflation surprises on to the upside, we don't see that. That's what Powell said, the Fed chairman. Latest moves in yields come as investors shun assets in risky traditional safe havens like gold and Japanese yen and treasuries. That is quite odd because that is the classic safe havens. But what I'm seeing on my, again, on the CFDs for Rwanda, the top two was UK. This was as of last night. UK bonds and corn were the top performers, and they've been like that since Thursday. So gold has been flat. Japanese yen, I just not registering on my top forex picks, and treasuries are not getting the same performance as copper and sugar and UK. I think the German bunds will go up as well, but they're just not taking on, from what I'm seeing, U.S. treasuries. It's positive, but it's not as strong as the UK or German bonds. And here's the important line here. Stock market has undergone a roller coaster ride this week, with the Dow turning negative on Wednesday before recovering some of the losses on Thursday. And from what I'm reading, Markets have been up for the year 1.8. Now it's down 0.7 because of the losses. So that's as of this morning when I went through the Bloomberg stuff. So yeah, but just keep an eye on the CFDs with the wind. It's a lot of people are not talking about those assets that I mentioned or instruments in terms of the major media, but I'm seeing it. That's where some of the capital seems to be going to as true havens as opposed to here like gold, Japanese yen, and treasuries. I mean, there is performance. It is positive, but nowhere close to the other ones that I mentioned. Hopefully this will help you out. Talk to you later.